Good evening, traders and investors. It's Tuesday, October 21st. Looking at the charts, equities in general, pretty flat day. We had the indices closed mixed. No real excitement there, although there was a ton of excitement in the precious metals space with a little bit of a meltdown kind of taking place with everyone rushing for the door. But let's just take a look at the equities first. So equities are at the upper end of the range, stuck at resistance. These are inside bars in this big down day from tariff news. If we look at the S&P 500, pretty much doing the same thing. It's not quite, pretty much at the upper end of the range. And if we look at the Russell 2000, it's pretty far away from the top. So we're going from the large mega techs are nearing all-time highs, yet the majority, as we move away from them to smaller caps, the stock market is further away from its highs. So we're definitely seeing a little bit of fear, riskier trades, or traders are moving away from the smaller caps at this point, trying to figure out what to do. Today, the meltdown, though, was definitely in precious metals. If we go take a look at gold, we've had the biggest one-day sell-off in gold since 2013, so this is a huge move. We have been talking about it over the past, right when we hit this Fibonacci level over here, which is where we locked in our discretionary trade. If you took this extra little side trade with gold, we locked in profits, had a sharp pullback, and then, of course, I talked about how once you hit this level, we're in no man's land in terms of we don't know where the high is, we can't really measure it, and volatility is going to keep increasing. And I mentioned that the last 2 or 3 days, saying get ready for big 4+% back-to-back days in gold. It could have a huge drop. It could have a big rally. It could have both. So we still could see gold and silver have a big explosive move to the upside. But today we're definitely seeing money flow out of gold, silver, and miners. And as people have piled in, chased this price higher with FOMO, as it seems like a crowded trade, those who are going to get into the precious metals space, I think, have pretty much got in. And most of them generally get in who have held out the longest, usually right near a short-term significant high, and then the market usually likes to take a bit of a hit there. Now, if we look at silver, it's done much of the same thing. It didn't push up to all-time highs, but it's definitely having all-time highs just recently. But overall, it's pulled back in a more significant way. Definitely, it's a more volatile asset, so it always moves much more than gold. And if we look at the silver miners, we can see they got hit the hardest. They're the biggest sector, the biggest sell-off sector in our whole hot list today, down over 11%, having a big unwinding event. And it just goes to show that the smaller the stocks you're trading, the more volatile they are. And then add to that, it's silver, which is volatile on its own, much more than gold. So you have to expect this move. I know some people are saying, I can't believe it's moved that far, and a lot of people are caught off guard, but this is what silver and silver miners do. They can have amazing runs, but they can also, in a blink of an eye, wipe out a good chunk of them, and they move very quickly. So you just need to be aware when you play with fire, you can get burned with it. It can work really well, but it also requires some skills in terms of managing positions and emotions. Like this is still just potentially a sharp pullback, and it could rebound and go a whole lot higher still going forward. So let's jump over to, before we get into precious metals too far, let's just go back to the stock market for a minute and look at the overall cycles. So we are getting into very interesting market condition again in terms of, are we going to have something like this where maybe we get a buy signal, it chops around, and then eventually potentially go into a bigger trend? Are we going to get something like this where it has a sharp pullback, the trend comes to an end, but it gets a new trigger, and then we have to wait as it stabilizes even more, and then eventually starts to move up? We just need to figure out what this market is going to do. And we could have a trigger, for all we know, a buy trigger in a day or two, depending on how things unfold. And it's just nature of the beast. We have this all the time where we have, a trend can start after a big move. It could get kicked out. It could have a big rally before it kicks into place and then run higher. Again, we just have to take the trades. We never know which ones are going to unfold into the big winners. The key is to, follow the strategy, work through the ones, manage all of them, but understand that we will have losing trades. And eventually we will have one, and we just have to see how this market unfolds. So let's go take a look at the overall precious metal space here, because there's some interesting charts unfolding. I've probably seen this before. This is 2008 on the left, and the current chart on the right is where we are today. Now, this is the S&P 500 hitting all-time highs, And yellow line is gold hitting all-time highs, and we're in a similar scenario from that regard right now. Now, the stock market has had this is a weekly chart, had 1 week, closed sharply lower for a week, showing some signs of weakness, and we saw the gold pull back, obviously substantially today. Now, if we take a look at 2008, it had a down week, eventually had a couple of down weeks, and we saw gold have its first sharp pullback. Now, what's really interesting here is what happens after this is potentially the stock market could stabilize and bounce. Gold might flounder a little bit here and build, try and stabilize. Eventually, the stock market sells off even more and starts to break down, and gold shoots higher. In fact, gold has a very substantial rally while the stock market breaks down. And that's going to be money flowing out of equities saying, where do I go? They're going to look at the best performing asset, and it's going to be gold. And then we could see people pile into gold, silver, platinum, palladium, all of that stuff. So I still believe we're right at this cusp here where gold is its one final leg. If I was to just say where I think we are right now, I would say we're somewhere right in this window right here. That's where I believe we are right now on the charts, which means gold, silver miners should have a pretty big move. Now check this out. Now, if we go back here, look at this first pullback in gold. We're on the first big pullback in gold here. Look at all the different assets. We talked about this in the mentoring session. I think I may have covered this in a normal morning video as well, but this is gold miners, the chart below it. They came to life. Everybody piled into gold miners. Money piled into silver, into platinum, into palladium. They started to come to life. And as the stock market eventually sells off a little bit and gold shoots higher, we also tend to see the other assets continue to move higher as well. So if we just take a look, you can see gold miners eventually should grind and recover. They're going to be choppy. And I've mentioned this before. I'd rather not touch miners. You're better to go in gold, which should have a nice foul swoop to the upside. We should see silver, platinum, and palladium all have very nice moves. The reason gold miners are now going to be potentially a struggle is because they are a stock stuck in the stock market, and the stock market is going potentially to be going down. So you're better to get out of anything related to the stock market and just get into physical metals or metal ETFs to play those nice swift moves to the upside. So that's kind of where I think we're at. I think the stock market is trying to put in a top, or could be putting in a top, but we still have more potential in the precious metal space, which just goes to show everyone who's panicking today in miners, which we can see the volume. You look at GDX, GDXJ, all of these here, we've got some pretty big volume to the downside. That is probably some smart money, probably locking in profits, but majority of it is going to be a whole bunch of traders who got into gold, silver, and miners really in the last month. Probably in this phase right here, all the people who've chased it, pure FOMO, and then it starts to sell off, and they're going to be the ones panicking, just hitting the sell button because they panicked to get in. They had FOMO, they got in, and now they're going to panic and get out. So that's kind of what I think majority of this is. That's what happens when you have a bubble phase. When gold, silver, and miners, they go into a bubble territory and they break all of our Fibonacci targets to the upside, we don't have, we're in no man's land. We don't know where a top is. It's a bubble phase. We could have another huge green bar and see, gold miners take off, or they could reverse. We don't know because it's in no man's land. There's no more ways to measure it based on how I follow the stock market. So it just becomes that bet. Now, if you were to look at this chart, you can see it is definitely a parabolic move. It looks pretty mature, meaning there's probably not a whole lot of upside left. If we look at silver miners, you could give this chart to a fifth grader and say, what do you think is going to happen next, right? Anything that goes straight up usually starts to struggle and then eventually comes back down again. Maybe not quite as quickly, but it can definitely give back a ton of that. And if we look at gold and go back in time for gold, gold is very, very clear. We go back in time. What happens after these giant parabolic spikes, right? So that's the scenario that we're in, is we just don't know where the peak is. And eventually when it does top, it's probably going to happen pretty quick, pretty violently. And unless you're perfect at picking a top, you're going to have to give back a good chunk of the gain before you really know it's a top, if you're trying to hold out for the maximum trend. So on the other side here, if we look at gold miners, I know a lot of people have been in gold miners for a decade. Anybody who got back in here from 2010 all the way to 2013, you've been underwater for a decade, and finally you get back to break even. And in 3 bars, it goes from finally it's working in my favor to in 3 bars, most people are thinking, well, I waited 10 years. It's 3 months in is just the beginning. But the charts are telling us 3 months, this 3-month move, it was the move or is the move. And there might not be a whole lot left. And so this is one of the big problems is you buy into something and you hold it and you just hope and pray. And then finally it gets back there. And then you get excited that this is just beginning. But it could very easily, remember, it could very easily pull back down and then trade kind of where you are for a long time still until we have like a reset in the financial markets, at which point I do think we'll see this eventually go a whole lot higher along with gold, silver. So that's my take on gold. I know I saw a member's question wondering if I've sold my physical gold or if I'm still selling it or when am I selling it. I am still letting the gold trend mature. I'm going to see how things unfold, and I will let everybody know when I do get out of physical gold, lock in my gold and silver for a reset to when I'm going to do that. Last but not least, if we take a look at bonds, we've covered this morning, but they're channeling up, they're trading higher. All the moving averages are layered properly. Let's take a look at the monthly chart of bonds to get a big picture of the overall trend. You can see bonds kind of settled back down into this big support area back in time over here. If we zoom in, you can see it does look and feel like it's getting closer to, this being the bottom and it's starting to like turn up. I still think there's quite a bit of work to be done. This is a monthly chart, but overall, I think there's going to be a very significant point here where bonds eventually build a base, and then eventually we're going to start to see the bond market come back to life and act as a defensive play. But we are seeing that today. Money is nervous today, doesn't know where to go. And we were seeing that a little more often over the past several months, that the stock market could go down or might not go anywhere, yet bonds move higher. So we are seeing it act as a defensive play again, although I wouldn't say they're participating the exact way we want them just yet. Anyways, that's it for now. We'll talk to you soon. Bye-bye.